There was a lot of discussion about the fact that the miss came at a time where they're considered a pretty savvy operator, and why would they be surprised by the level of shrink? What were your thoughts on that?
So it was a combination of the level of shrink, and it was also some proactive kind of purging of these kind of long-staying, long-dwelling, I'll call it, kind of seasonal inventory, kayaks, right, outdoor equipment that, frankly, they held on to it for a year, after 2021, and it's still not selling. So there's 7 weeks to kind of sell through some of that summer goods, and they decided to take, arguably a write-down, so to speak, and that was probably the biggest piece of the surprise. So shrink, we've heard about it, but they do their physicals in July, so that's kind of the new information. But it really was that promotions, right? That level of promotion that kind of scared everybody into thinking like this is the new norm. They too kind of have this issue.
It's interesting because we hear from these retailers about how the consumer in the last few quarters has really been shifting their spending habits toward experiences, away from goods. But then you look at a Dick's, you look at a Foot Locker, and even the Nike performance in the last 9 sessions, and you have to wonder if spending on goods to kind of fuel some of these experiences that people might be having this summer, that also isn't really playing into that narrative. Why do you think it is that experiences are still so popular, but the goods that people would maybe purchase to use in those experiences have kind of seen a different trend here?
So I think it goes back to 2021. So when the world reopened and you could not spend on services, right? You had all this stimulus, this kind of these checks in your mailbox, right? And so this money was burning a hole in people's pockets. And when they came out, they spent on goods. And so 80-90% of that wallet spend in 2021 was effectively on goods because you couldn't spend it on services. Well, the world opened up, mask mandates globally came off in March of 2022. What did they do? They went out into the world and they spent on services. So it's almost like a targeted laser that's kind of just moving from goods to services. And, services spend even pre-pandemic was 2/3 of discretionary. So, of course, you had this over-indexing, right, to that services spend. You're now starting to see potentially, right, this kind of normalization of possibly the service spend and a renormalization over base lows, right, of kind of apparel, right? So the first thing you're going to come back and buy is apparel. And now footwear, which basically had the worst and longest duration of the supply chain blockage, right, is now starting to get that inventory excess. You're seeing the wholesalers not buy footwear. And so it's just going through its normal cycle of supply demand.
Yeah. I was going to say, it's hard to have a discussion about sporting goods and not talk about Foot Locker today, 13-year low. We mentioned Nike earlier this morning. That's a 10-month low. So you're arguing these are just classic sort of bullwhip effects, given that the sort of the curveballs we got during the pandemic.
I am absolutely arguing that. That's exactly, well, what I would say is I'm arguing that for Nike and for DKS. I think Foot Locker is in a transformation that is clearly the outcome is unknown. Right? We're now at 2-3% operating margins. That's a very dangerous zone, right? Whereas, DKS has had a kind of transformation. Pre-pandemic, they were running a 5% margin. Now they're running a 10% margin business. That is a transformation that's to the positive, and they're partnering with Nike. They're sort of the chosen one by Nike. So I would say we are using this weakness, right, to definitely kind of get back into DKS. They have easy margin compares coming up. So down 440 basis points on merch margin in the third quarter and down 640 in the fourth quarter. With Foot Locker, I think this is the third lowering, the third drubbing of the stock in 3 consecutive quarters. I think you really have to stand down and wait for kind of the dust to settle to see what we really have here in Foot Locker.
Right. Intriguing on DKS, especially as some of your peers downgrade today, at least 2 downgrades on the street. Adrienne, thank you. Good to see you. Adrienne Yih of Barclays.